Hey everyone, this is Ryan Mallory for SharePlanner.com. Today is October 15th, 2015. Doing another Google Hangout with you guys, and today I want to focus on trade setups that involve the pullback play and the breakout play. Basically, how I trade a pullback play versus risk and reward and the position management versus how I do the same for on the breakouts. So pullbacks, breakouts, that's what I'm discussing today. Before I jump into those, let's go ahead and just take a quick look at the indices here. We had a intraday pullback here around the lunch hour time that lasted for a good hour or so before, and then we just ripped higher ever since then. So prior to today, though, we've seen a lot of sell the rips on the market, basically the last 4 days. And at lunchtime, it looked like it was going to be another one of those days. We've had 1, 2, 3, 4, and then finally today we are just ramping higher. It's at a great solid pace, something that we haven't seen for a little over a week now. So to see that come back into the mix is great. We held on to the 10-day moving average today. That was definitely a good sign. We also held on to the 50-day moving average yesterday. So those two things going on definitely helps the market out. You have this double bottom confirmation that has already taken place, and it should start playing out to the upside. Maybe we get a good run to the 2040, possibly even higher. 2059 has been the break-even mark for the market this year. Ultimately, I actually would be surprised if we finished lower on the year. We're going into the strongest quarter historically for the stock market. So it would definitely make sense to me if the market finishes higher on the year. I'm not saying for sure that's going to happen. And if it doesn't, it's no skin off my back. I can trade any market whatsoever. And if it's a bull market, I'll trade to the long side. If it's a bear market, I'll selectively short to the downside. So, and when I say short to the downside, selectively, I mean, I'm just not going to go, 100% short, because I think there's a lot of foolishness in doing that, but due to a lot of the risk and the, how aggressive you do in general. In general, you have to be pretty aggressive with booking gains to the short side. You can't just hold on to picks forever like you can with a long setup if the setup works out right. So, with that said, let's go ahead and look at the trade setups and what I'm going to use for this video. I'm not going to go pick and choose trade setups from my past that have worked out really well. That's easy to do. Anybody can do that because everybody has a slew of good trades that they can point to. What I'm going to do is I'm going to look real time at the portfolio that I am currently trading, which consists of 6 trade setups, and I'm going to go through each of them and explain why I'm trading these right now the way I am. And now, some of them may not eventually turn out to be profitable, and that's fine. A lot of people get hung up on the fact that a trade strategy isn't legitimate unless every trade is right, or 90% of them are right. A lot of trades are not going to work out regardless of how good the chart pattern is. I've had tons and tons and tons of losing trades in my lifetime, and I'm not afraid to admit that. But on the other hand, I've also had more winning trades than I have had losing trades, and I've managed those winning trades with a lot of precision and with a lot of aversion to unnecessary risks. So today in the video, I'm going to take the positions that I've currently taken and dissect them, as a trade pullback or a trade breakout. And first off, I'm going to jump into CVX. Now, these are all trades that I've taken in the SharePlanner Splash Zone. I send them out via text, via email, and also via the chat room that I'm in each and every day. So if you want these real time, you can always sign up for the SharePlanner Splash Zone by going to SharePlanner.com/splash zone. Okay, first trade up, CVX. Took this one today. Actually, we haven't even been in it that long. So CVX, I got into this one at 89.81. It's up about 26 cents or so right now. What do I see in it? And actually, this is like the first trade setup that I've taken in the oil name in probably like over 6 months. I've really stayed away from oil for the most part, simply because I've been very skeptical of a lot of trade setups, but this one has actually come together very nicely. It's withstood some of the pressure in oil of late, and it's got a breakout that's well underway. So what I'm looking for here is a breakout. This isn't a pullback play. This is a breakout. You got a nice bull flag here. I mean, this is textbook bull flag. And originally, I didn't even find this in the chat room. I was struggling to find some decent setups today, and somebody said, "Hey, take a look at Chevron." And I looked at it, and lo and behold. And so yeah, I don't care where I get the setups from, whether it's through my own research or somebody in the chat room says, "Hey, check out this stock. If it fits up to snuff, then I'll take it. No problem there." So we had about a 3-day pullback, consolidated nicely. It never really gave up the support level that was formed last week here, but overall, it stayed right in that range, creating a nice bull flag. And a bull flag is basically like a flagpole, right? It goes up, and then you create this little flag pattern, and that is what you got here in CVX over the last what is that? Five trading sessions if you don't count today. So. So this is a really good part, a risk reward that you could take here. So I put my stop loss below this candle here. So my stop loss is at 89.27, which is a few cents below that candle from the 13th. And then the breakout is already underway here. It's starting to move up higher. It's pushing out of that range. You can see that the stock is just a smidgen outside of the bull flag, and that's what we want. That's where you want to get into your trades at. So to the downside, you know, if I have a stop loss of 87.27 and I have a risk of 89.80, or I have an entry of 89.81, that gives me a risk of a little over 2%. And so if I get 4% out of this trade, say this thing goes up to 94-ish for me, I've already made twice the amount that I risked on a trade. That's great. If it goes up to 96, even better. I've got a target of 98, 91. I don't know if it'll actually get to that level, but that's probably like the optimum profit range that I see for that, or opportunity for this trade. If that does happen, that's like a 4-to-1 risk reward. So it's not about, do I get 10% on every trade? It's really about, what am I getting in risk when measured against, or what am I getting in reward when it's measured against the risk? So that's really what you got to look at there. So CVX looks really strong. That's a textbook bull flag breakout. Okay, so file that one under breakout. Now let's look at the next one, DIS. DIS, if you follow this into the last earnings, you know that this stock had a really bad earnings report. Okay, so that's definitely weighs on everybody's minds going into this next earnings report. I'm not going to hold it into earnings. I'm not foolish enough to do that. I'm not smart enough to know where this stock is going to go after it reports earnings, and what investors are going to think, and what the analysts will think of the stock afterwards. I have no insight into that. People ask me all the time, what do you think it's going to do at earnings? I never know. I don't know how you can know. How are you going to predict how millions of people are going to react when a stock submits its financials for the past 3 months? How do you know? You gotta get it right on the. You gotta know how they're going to react to the past quarter, and then you gotta know how the market's going to react to how the company forecasts its upcoming quarter in the upcoming year. So if you can get all that right, then you got to hope that you can get the reaction to those numbers right. So a lot that goes into earnings, and quite honestly, I don't see the risk reward fitting at all for it. So DIS, this is another breakout. Okay, what do I see in this stock that caused me to want to get into it? Well, if you look at here, this going back to the 24th of August, it had a huge down day. The market was dropping pretty hard during this time too, but you got actually a pretty solid breakout level here on the stock. It's not absolutely clean, but it's pretty darn close. I mean, you've got multiple tests here going back into September, one here, and then a couple there, and then another one that actually broke above it intraday but failed to hold it. So finally on the 9th of October, when it started breaking through this pattern here, this is when I got long, right when it started getting above it there. And actually it got above it, and then it pulled back a little bit before the end of the day. So while it was breaking out during the day, it couldn't hold it into the close. I still held it overnight because I didn't feel like the trade was compromised. I put a stop loss on this trade at 102.59. So the stock would literally have to break below this 20-day moving average, and would also have to break below this little area here of support that's in the mid 102s, and then it breaks through the 200-day moving average today. I thought that was very important for it to do that. In fact, it gapped above it. It's got the 5-day moving average trailing right below it. So this is a good breakout play here. Now the difference between this and Chevron CVX that I traded today, CVX is more of a short-term breakout. So there's a good chance that Chevron could pop 5-6% in a matter of a few days, because it rose really hard into current highs, and then it consolidated for a few days, and it's breaking out again. So it could shoot up just as fast as it took for the stock to get to that level of consolidation. It could do the same thing on the second leg higher. DIS, I don't expect that same kind of move. I mean, I think, okay, you could probably get 4 or 5% out of this trade, but maybe even more. Who knows? Right now, I'm up about 1.6% on the trade. But this is more of a longer-term breakout. This one goes back a couple of months here. So, if we can get this thing up to 112, 113, I think that's going to be a great area to go ahead and just start booking the profits. If it just goes absolutely nuts, where the buyers and the street in general decide, hey, this is a time to start loading up on Disney stock, then maybe it could start getting into that gap there above 114. So this is another one, 500 breakouts. Now you have Facebook. This is a hard stock to trade. This is kind of like Netflix, in my opinion. Not the easiest of stocks to trade. In fact, I've traded it twice this week. I'm up on it right now. I traded it back on the 13th, which is just 2 days ago. I did not succeed in my attempt on that trade. As you can see here, on the 13th, I was looking for the breakout. It hit that breakout level, went a little bit above it. That's where I got in at, and then it retracted. At that point, the market was still a little bit on shaky ground there. I decided to go ahead and sell my position and go on from there. Now, the following day, I get into it yet again. So I get into it at 95.09, and then it pulls back yet again. So you kind of feel a little bit foolish on this, but this is a good breakout play. This breakout play, goes all the way back to July highs, and it goes all the way across to connecting just perfectly. And it's hard to find good setups like this. And then you've got a rising trend line, obviously, too. And then you got a whole slew of converging moving averages right underneath. You got the 5, the 10, the 20, and the 50-day moving average, all offering its own kind of support there beneath the stock. So I put my stop loss at 91.88, which is right up below the opening price from 10.8. It goes below that, I'm going to get out. But the breakout here is really strong. I mean, it's definitely something worth getting excited about. The obvious initial price target would be a pull to par value at $100 for FB, and then beyond, who knows? But it's got earnings coming up as well, so we're going to be hampered a little bit by how long we can hold on to the stock. But this is definitely another stock that you would follow under breakout. And yes, I do have a pullback, so actually 2 of them that we can talk about here. See, GOGGL, this is not the pullback that I'm talking about, but nonetheless, it's actually got 2 different converging breakout levels that are really important here. Right now on this stock, I'm up about 2.5%. I got in on it on the 12th. I got in at 66.76.40. And by the way, a lot of people get hung up by a stock that's trading in the hundreds of dollars, particularly a stock like Google that's trading at almost $700. People say, oh, that stock's too expensive. Folks, I can't reiterate this enough. It has nothing to do with the number of shares that you buy that determines how much you make on a trade. It all determines on the percentage value, the percentage move that a stock makes while you're in it. It has nothing to do with the shares. People like a lot of shares because it makes them feel like they're buying a lot of something. But really, shares don't really mean anything. It really doesn't. It's really the capital that you're allotting to it. Whether you're allotting $10,000 to a $1 stock or $10,000 to a $1,000 stock, if the stock moves 10%, it's going to be the same dollar return either one. So here you got Google. We got into it on the 12th. It was breaking out above this price level support. Now the price level support, this isn't what you would call the perfectly clean support level, because it has been violated on a number of different occasions to the upside, but it has also found a lot of resistance to the downside, where once it was hit, it retracted rather quickly. It did that here. back in early August, and then it did it again here in late August, and it's mid to late September. And finally, it starts testing again and says, okay, it might be ready to break out again, and it does. But now you have another declining resistance level here off of the July highs, and this is like a perfect declining trend line here. I mean, it's been tested from the July highs, again in August highs, and then again in the September highs, and here we in the October highs, and it finally breaks through it. That's where I get long at, and right now it's trading at 693 almost, up about 2.5%. And so, the key here is going to be to start moving up the stop losses. So while my stop loss is at 654.40, I'm going to have to end up moving that stop loss probably a little bit higher, maybe up to like 676 or so, which would be, or 667 or so, to make sure that if the stock does pull back, I don't take a massive hit to the downside unnecessarily. So, I on my stop losses initially, I try to aim for a stop loss that's somewhere between 2.5% to 4%, no more than 4%. And that allows me to always keep the risk in my favor, so that when the stocks do run in my, favorably run in my favor, that does not sound right. When a stock runs, when a stock goes higher in my favor, I'm not having to get a big move out of the stock to the upside to match the risk that I initially put on the trade. So I keep my risk tight, man. I think that's really important. So that's GOGGO, another breakout. I do a lot of breakouts, particularly when the market's rising like this, like it has been since the beginning of this month. MasterCard. This one got into MasterCard yesterday, and this stock here as well is a pullback play. So initially it did break out. It broke out really nicely. It went higher, and then the last 2 days of trading, it saw it pull back. It pulled back to the support level here. And for me, that was a really good opportunity to get long on the stock, because that support level has been tested multiple times, and it's bounced off of that support level multiple times. So there's definitely some buying interest at that level. So let's see, I got into this stock at 95.51 or so. It bounced off of it, and today it's almost 2% higher. Currently, I'm about 1.4%. So when I got into it yesterday, it didn't quite bounce like I was wanting it to. But again, the market doesn't always work in the timing that we expect it to. So that's what the stop losses are for. Obviously, I have a stop loss on this trade at 92.53, so that if it does go against me, I'm going to know that it's gone against me. If it starts to try to fill this gap from the 5th of October, that's going to be my sign to go ahead and get out. There's something that's gone wrong in this trade. Now, if we can continue to get some more progress out of this trade, I'm going to eventually move this trade's stop loss closer to break even, probably just below the lows from yesterday. So that's a pullback to support. The last one is Starbucks, and this one's kind of frustrated me so far. We've been up about as much as 3% on this trade. Got into it at let me check my notes here, but we got into it at 58.67 back on the 5th of October. So you go back here, this was the initial breakout. Now, I say this is a pullback play because right now it is a pullback play. When I got into it originally, it was a breakout play. But I'm gonna focus not so much on what it was when I got into it, but what it is right now, because I still think this is a very valid play to trade. So you got this rising trend line off of the August lows there, and instead of going, a lot of stocks have this crazy shadow down there, and a lot of people have said that wasn't really, there was a lot of malfunctioning going on that day. So I've basically just used the candle body for when I'm drawing trend lines based off of the August price action. So here I just draw it from there, and then you can see it connects really nicely. It gives a good pattern for where the stock is trying to go, and then you've got a huge level of price resistance right up here towards the highs. And so today and yesterday, what we ended up having was a pullback to both of these levels here. You can see when I zoom in on this trade that there is a lot of support right there. It goes early on today, it goes back all the way to this trend line, and then it actually dips a little bit below it, but eventually it finds support and it holds that. It also holds this price support level. So this is a pullback to support as well. Just do two different support levels, and sometimes you can just make a trade off of a pullback off of one of these variables, but it's always nice when you have two of them working in your favor at the same time. In this case with Starbucks, you have a pullback to a rising trend line, which is great. I love the rising trend lines when it's just testing that trend line for the third time. So in this case here, 1, 2, and then this is the third test of that trend line, and it's trying to bounce off of it. So a lot of times that third test, you can get a really good boost higher. And then you have the price level support. So there's a lot of people that continue to find value at the high 58s to the $59 price level, and that's what we've seen today so far. So a nice recovery in Starbucks today. It's up a good 1.2% on the trade now. I am up about 1.4%, and looking for this one to continue to move higher, get back over that $61 price level, and see how long it'll allow us to stay in this trade. So the stop loss on Starbucks that I'm currently using is 57.88. I've actually moved this one up, but as you can see here, if it breaks below this price support level right here, there's really no reason to hold on to this stock anymore. It's going to be very plainly obvious that something has changed the tide in the stock, and that the risk reward is no longer favorable. So then that's when you get out. So I've thrown a lot at you guys here. I'm almost hoarse from just talking on this video. But this is 6 trade setups, 2 of them pullbacks, 4 of them breakouts. You can sort of see what the differences are, how I trade them, what I'm looking for in them, and the different varieties, shapes, and sizes that they can come in. So as always, if you have any questions about what SharePlanner is or how you can become part of the SharePlanner Splash Zone, feel free to email me at ryan@shareplanner.com, or you can just go ahead and sign up. There's a free 7-day trial at shareplanner.com/splash zone. And if you don't like it, you can cancel it. If you do like it, stick with it, and we'll conquer these markets together. And then finally, this is a hard year for trading. This isn't like what we saw in 2010, 11, 12, 13, and 14. This is a market that tries a lot of patience. So videos like this, it seems like I'm overstressing the risk on the trade and not emphasizing the profit opportunities enough. But as a trader, we have to emphasize the risk at all costs, because the moment you forget to focus on the risk is the moment that you lose your edge as a trader. If you focus on the risk, always manage the risk, manage the possibilities of completely ruining your account because you're not willing to manage the risk. If you don't do that, then you're setting yourself up for disaster, and you don't want to do that. So that's going to be it for today. We got Friday tomorrow, so you guys have a great weekend after tomorrow's close, and be ready for trading again in the week ahead. God bless.